Hey everyone, welcome back to the channel. Today we're diving into two very different companies operating in the fast-growing world of artificial intelligence, BigBear.ai and UiPath. Even though both fall under the AI umbrella, their business models, long-term potential, and growth stories couldn't be more different. So if you're thinking about investing in AI stocks or just want to understand where the industry is heading, make sure to stick around all the way to the end of this deep breakdown. Let's start with the basics. BigBear, trading under the ticker BBAI, focuses on analyzing data directly at the edge of a network. Think of edge networks as a middle layer between a company's servers and the end users. By plugging into this layer, BigB can capture data before it reaches the main server, allowing the company to produce faster insights than systems that rely only on local computing. Their technology is built around three core AI engines: one that ingests information, another that identifies patterns and trends, and a third that forecasts what's coming next. This enables businesses, mainly government agencies and defense-related clients, to make quicker and more informed decisions. On the other hand, we have UiPath, ticker Path, a company that has become one of the largest names in robotic process automation, often called RPA. Instead of intercepting data like BigBear.ai, UiPath builds digital workers, basically software robots that handle repetitive tasks such as sending emails, filling in forms, entering data, processing invoices, and even onboarding customers. Their tools are plugged directly into a company's existing systems, and the goal is simple: cut costs and increase efficiency through automation. Now, one thing both companies have in common is that early investors didn't exactly get the returns they were expecting. BigBear.ai listed through a SPAC deal in late 2021, starting out at just under $10 per share. Since then, it's slipped below $7. UiPath also had a rocky start. Its IPO price was $56 in 2021, and today the stock sits much lower. So the big question is either one of these two worth buying now? Let's take a closer look at BigBear.ai's performance first. Even though the company has been active in expanding its capabilities, the growth numbers haven't been impressive. Over the past 3 years, BigBear.ai increased its annual revenue from around $146 million to just $158 million. That's not much progress for an AI company trying to scale. And some of that growth came from acquisitions rather than organic progress. For example, BigBear.ai bought a company called Pangiam for around $70 million. Pangiam specializes in visual AI tools, and its CEO, a former acting secretary of Homeland Security, later took over the leadership role at BigBear.ai. That sounds exciting from a political and networking perspective, but the financial results still haven't shown major improvement. The company also recently agreed to purchase Ask Sage, a generative AI provider, for roughly $250 million. This acquisition is expected to close late 2025 or early 2026. While this could enhance BigBear.ai's ecosystem, analysts are already concerned that the company is becoming too dependent on acquisitions rather than strengthening its core operations. And the numbers reflect that concern. BigBear.ai expects revenue to decline significantly this year, somewhere between 11% and 21%, landing between $125 and $140 million. The company mainly blames this slowdown on disruptions in its government contracts, especially projects tied to the U.S. Army, as the federal government reorganizes its data systems. Its backlog, basically the amount of future work already secured, also went down. Margins dropped too, meaning the company is making less profit per dollar earned. Analysts believe revenue may rise again in 2026 thanks to the Ask Sage acquisition, but then possibly shrink again in 2027. On top of all that, BigBear.ai still isn't profitable and isn't expected to reach profitability anytime soon. Now, let's shift to UiPath. UiPath's growth story looks much more stable. Between 2021 and 2025, the company increased its revenue from just over $600 million to around $1.4 billion, averaging more than 20% growth per year. However, even UiPath saw things slow down during the last couple of years, mostly because of global economic challenges and rising competition from newer generative AI tools. The rise of platforms like ChatGPT raised fears that UiPath's automation methods could become outdated. But that hasn't happened. UiPath continues to innovate, releasing new AI-based features that analyze data handled by its software robots. These tools help companies track how automation is improving their workflow, making UiPath's ecosystem more sticky and harder to replace. The company also managed to maintain an impressive gross margin, around 85%, and even turned profitable under GAAP, which is a major milestone. Revenue for fiscal year 2026 is expected to grow around 11% to nearly $1.6 billion, while analysts predict continued growth into 2027. UiPath may no longer be growing at explosive startup levels, but it's still expanding at a healthy pace for a large enterprise software company. Now let's compare valuations. BigBear.ai, despite its many challenges, trades at a high valuation, around 19 times next year's expected sales. UiPath, meanwhile, trades at around 5 times its expected revenue. Investors prefer companies with strong fundamentals, steady revenue, and proven profitability, and UiPath checks those boxes more clearly. BigBear.ai feels like a company trying to catch up through acquisitions while fighting declining contracts, shrinking margins, and inconsistent growth. This put everything together, the financials, the growth trends, the management stability, and the long-term potential. UiPath appears to be the stronger and safer choice between the two. This is not financials advice.